Hey guys, it's Tom Thornton with Geoff Garbacz of Erlanger Research and Quantitative Partners. Today we are doing another short interest data webinar. It just came out the other day, and Geoff has some thoughts about what's going on in this market. The last time we did this, we did see a rather large decrease in short interest, obviously due to the market running higher. Geoff, let's get started, and why don't you share your screen? And we can get the party going here.
There we go. Got my screen up.
Okay, there we are.
So let's
Okay,
just hit on the simple concept for people that might not know what a short squeeze and a long squeeze are. This is out of our weekly picks. So a short squeeze is stock that I'm going to make General Electric full screen, has a strong technical rank. We rank stocks technically from 10% to 100% in 10% increments. So right now, GE has the strongest tech rank you could possibly have. And then we look at the range of the short ratio historically through time. And we can see that short interest has dropped off, volume has dropped off, but now what's happened is the short ratio has risen, and we're at 1.61 and 68% intensity. So this is a short squeeze right now. Another good example this week has been Uber, although we just got short interest data and it dropped down, but it's been on my list for 2 weeks, so it'll probably go out this week. But you can see still 2.59 days to cover, still a lot of absolute share short, and a strong technical rank.
I see.
Um,
Why
opposite
don't you go through? Oh, sorry, go on. The type
opposite of
4,
that
sorry.
is what we call a type 4, which is a stock that is weak technically and no one is short. A good example of that is this junky stock, PayPal. You can see the tech rank is at 10%, and it's been basically at 50% or below all the way back until here, October of 2022. And that point, the stock was, call it around the mid to high 80s, and now it's down at $59. So if and when we ever get back into a corrective period for the entire market, these are the type of stocks that will underperform the most. Why? Because people will go to sell them, and there will be no shorts covering them out. So far, they've been tough stocks to short, but they're working okay. So that's just a great way that we like to track what's going on in the market.
Where are we last 2 weeks versus this 2 weeks?
Yeah, New York dropped by 70 basis points and Nasdaq increased by 11 basis points. So really not much of a change. I think the most important thing to understand about the market right now is, let's go into our sector stuff, because we do this tech rank and short rank underlying stocks. We can then look at sectors and see how they're doing. And I will mute these guys in a second.
Offer expire March 15, MNST.
Tom, what's amazing is, look at this. Look at the average tech rank. We only have one stock that has a tech rank above 55%.
It's pharmaceuticals. Okay.
Yeah. And look at how many are negative. 2, 4, 6, 8, 10, 12, 14, 15 sectors have a tech rank of 45% or below, which is really pathetic if you think about it. If we're at an all-time high, we should have lots of stocks doing well. And the fact is, most stocks are still dramatically underperforming the S&P. So that's not good to see. And if we look at absolute share short on sectors, only 2 sectors are above 50: energy and autos and components. And look at all the sectors that have light short selling. 2, 4, 6, 8, 10 sectors are below 40%. And look at how many of those the sector rank is red, which means that they're underperforming and they're weak. So
Yeah.
this is not a great market. Anyone who thinks it is
Look, you can, I agree with you. It's just, I'm seeing so many divergences as well. The one, actually, why don't you, before you go, you don't have to go through your whole thing, but
I only want to do one more thing. I want to
Okay.
come and talk about what's happened this week so far. So obviously, we just pull up a chart for anyone who may not be aware of this. And let's just look at SPY real quickly. Monday was a flat day. Tuesday was down big. Wednesday we recovered, and then yesterday we added, and now we're down pretty decently today. We're only down about 20
We're
basis.
coming back. We're coming back.
We're back a little bit. We'll see. We'll see if it holds. This is a crazy day because of options expiration. We'll see how it plays itself out. But what's interesting is if you look at the types, we track the types and how they're doing on a day-to-day basis. So right now for the week, short squeezes are up 1.72% for the week. Meanwhile, the S&P is up only 8 basis points. The Russell's up 2.68 for the week. Type 2s are doing well technically, no one is short. Because these don't have short squeeze potential, they're only up 58 basis points for the week. And we have a lot more stocks that are 3s where the shorts have been making money, or a type 4, which we just talked about, which is weak technically, no one is short. So the type 4s are up 1.09 for the week, and the type 3s are up 1.78. And the last 2 days, big rebounds, 2.35 and 2.17. The 3s are up 1.58 and 1.99. The 4s are up 1.36 and 1.61. And these are 2 ETFs I love to track. DWSH, which is a short-only ETF, for the week, it's down 2.25. And BTL is a market-neutral long-short, and it's down 1.70 for the week. So not a great week. And then last, we do picks every week, our favorite longs and favorite shorts. Been very whippy for the week so far. You can see down here Tuesday, Wednesday, Thursday, Friday. So yesterday's close, the short squeezes were up 110 basis points. This morning now, I just ran it, they're only up 17. Our type 4s were up 101, and now they're up 73. So the hedge was up 9 basis points, now it's down 56. Thursday's opener was up down 103. And Tuesday's close was down 141. So a lot of whippiness to the week so far. But my gut tells me we're going to do one other thing, one market timing thing that we like to look at. The type 4s have climbed above 10% again. They climbed up, came back down a little bit, but they have been climbing since late January. And you never want to see the type 4s rising when the S&P is rising as well. So this is
that to me, this is always one that I like to look at. So type 4s, those are stocks that don't have a lot of shorts involved. And when you see that lift above 10%, that typically sees pullbacks ensue after. Yeah,
when the S&P is doing really well. So
exactly.
But if we had type 4s rising and the market was falling, that would be normal and expected. But what's interesting is this is just, it's not good. We've had a heck of a run here. I love that so many people are just incredibly bullish and just general comments on social media, people interacting with me. And I'm like, guess what? So far, we've only had 2 down days this month, and we've only got 8 days left in the month. So the odds probably in a best case scenario, you're looking at probably 4 up days and 4 down days.
Yeah.
Probably
so Geoff,
into 5
Geoff,
down.
let me expedite this a little. Can you go back to the screen where you had your energy showing that those were the most shorted, the most shorted area in there? Because this has been absolutely a mess. And I've been buying energy stocks and down here, which feels lonely. And I certainly think that there's the potential for these to improve, especially if you can get natural gas to move off the mat and bounce a little, which I think is possible. It's gotten a bit overdone on the downside. It's not really
I agree.
moving.
If we take the short
So
route.
where are we? And let's look at what is potential for upside squeezes. And let's stick to large ones instead of the, teensy ones.
My favorite is Chevron. What's interesting about Chevron is it's at 100%, and its absolute number of shares short is extreme, and it's got a big short ratio too. I love this one. And Buffett just increased his stake. They just upped their dividend. This thing clears the 200-day. It's off to the races. Similar, but not quite as good as Exxon. Same thing, 5.31 days to cover.
I think this is just incredible how much is there. Can you let's look at a couple drillers. Can you look at Halliburton?
Yeah, sure. Pretty good, 85, 2.77 days.
Yeah,
Tech rank not pretty weak still, though.
Yeah, I think there's the potential there. What about range resources, RRC? This is one that I'm long as well. I added to
Yep.
it yesterday.
People are short that too.
Okay. That is actually up today. That's good. We like that. So that'll probably do it with energy. We think energy is overly shorted. Let's just dig right into the most important stock in the world. That's NVIDIA.
Oh, another one, Tom, which had earnings today is Oxy too. Oxy looks really good as well.
Their earnings were today or was
I thought it was today, yeah.
oh hold on. I thought it was
Maybe it
no,
was
this
today.
Oxy was where is my Oxy?
It was recently though. I guess yesterday, because maybe that's why it was up
I'm looking at
decently.
my sheet here and I'm an idiot. Okay, let's not show our age here. Let's look at NVIDIA. This one, I think the whole market is riding on this one, and I think we need to examine this.
I heard someone say, it's funny, my eighth grade boy, we're doing a bunch of geometry stuff right now. And he had a test this week, so we were studying. And I heard someone yesterday say, you don't short right angles.
Yeah, it's hard.
Sounds like we've been working on Pythagorean theorem and some other stuff. And I showed him a chart and I said, "This is this a right angle?" He's yeah.
Yeah,
This is
well,
about us.
the one thing I will say also is we have, I think the stock has sold off into after earnings, the last two reports, notably in the summer when the big AI bubble started, they sold off about 20% off the highs into the October lows. And then in November, it sold off almost 10% after earnings. So I think there's risk to this one. There's daily and weekly DeMark signals that are
Yeah.
telling me that it's exhausted. I don't know if this one has actually shown up in the short data because it's really moved so much in the last week. And short data is 2 weeks ago. And this one, SMCI, super duper micro.
Yeah, this one actually is really not much of a. It's got what the deal is, the absolute number of shares are short, but it's trading so much volume. That's why the short ratio has dropped.
Yeah, this is the definition of a bubble here.
This is your right angle chart.
Yeah, and as I was saying earlier, I put a little of this on just for shits and giggles in the fund, a couple hundred shares, not a couple 100,000 shares, but my fund is small and I'm such a chicken and I covered half down to almost 200 handles. So I was like, yeah, it's good. Happy. So let's move on. I want to look at one that has moved lower and I think still has fundamental risk, but the stock's bounced off the lows. It's Tesla, as some people call it.
Yeah, and let's go back to doing the. We can see if there's anything on the option side too. It actually has call activity, but it hasn't had the run either, which is crazy. It's a very small run, and all of a sudden people get excited on the calls, which to me is kind of really.
Yeah.
Down here, what do you expect to see is excess put activity, and we're not seeing that in Tesla.
Yeah,
So
usually that's different because usually when we see Tesla go down, then we see all the put buying start. And that's been
we're not seeing that. Yeah.
yeah, that's interesting. The call buying, it's been pretty extreme. One that I have a bunch of people that one person just asked, how old is the short data on energy? Everything is 2 weeks old. And so take it with a grain of salt, but it tends to matter over time. And I think that it's built up over time,
Yeah,
especially energy.
the thing is for people to realize that short interest really moves like an aircraft carrier and it does not move like an F-15.
Yeah,
That's the
exactly.
key.
Can we look at, here's one that ENVX request.
Nothing really to get excited about.
There's shorts involved there. They're
Yeah,
there, but
there's
it, it's
yeah.
not like it's going to cause some Herculean.
Doesn't have a lot of history to it.
Right.
It's in a basing formation. It's good. It's above $10. That's why the tech rank has improved a bit, but it is 6 days to cover. It does now have excess calls after this little move from 10 up to 1170, which is a pretty good move on a percentage basis. It's 17%.
So one little guy that I had in the trade ideas sheet, it blew me up twice and I took it off. I still have a little bit long in the fund, but it's certainly not as much as I had before. It's working now. PCT, Pure Cycle. Now, just before you get started, I'll mention they did something that very good. A good thing they did recently is they bought back a bond issue that had covenants that they needed to produce X amount of their plastic pellets. Now that covenant is gone and they bought back this bond, the short thesis that they would default on that is now done. And I do know that there was a short report out by some 24-year-old kid that in his mom's basement that was saying that they were going to default, blah, blah, blah. And he actually, someone I know talked to him and said that he had covered, but of course he doesn't tell his people on Twitter that he covered, and now the stock's starting to lift. So tell me about the short interest.
Yeah, it's got a low short intensity, but it's got a high short ratio. So it's still a squeezable stock, 13.58 days to cover. And as we know, that's how many days it would take the shorts to cover out. So you can multiply it by 2 easily to say, if there were longs competing against the shorts, it would take twice as long for the shorts to cover, which would be 26 trading days, which would be like a month and a quarter. So
yeah, that's not going to go well.
This is a roach motel at this point for the short sellers.
Yeah, I think that when you have the thesis broken, I think that's the risk. Again, it's super high risk. It's a small cap, or actually, it's not that small, but it's something that's small, let alone that. Can we look at, we did NVIDIA. Can we look at Apple? This is one that I'm going to stay short. I don't see them necessarily improving here. And I know the shorts were higher and it's starting to come down.
It's 62%, but it's only got a short ratio of 1.76 days to cover. It's got excess call activity now. The Erlanger option rank, lower left-hand corner, is down at 28%. It's underperforming the S&P, it's underperforming the sector, and it's underperforming the group. So it's in trouble.
It's interesting because when you look at the option rank and you see those red dots, that's telling you the call buyers are just very active. And now they're back. It's not that high, but usually when the stock goes lower, you get the heavy put buying, and we haven't seen that at this point. That's why I'm going to stay short because, first of all, they have no growth. They have really no new products except some AI phone, which, let's just be real, we'll think of it that way. I'm going to keep
I wanted to just pull this up just for people to see. So here's the Magnificent Seven, and it doesn't look that great. Here's the daily. Red, obviously, is a downtrend or a pullback. Only 2 stocks daily are Meta and Tesla. Tesla's in rally mode, and Meta's the only one that's in a true uptrend. A couple have negative volume. The weekly, a couple are mixed. Daily, weekly. Apple, which is interesting, if it breaks its monthly DMA channel, then it would be below all 3. Tesla just needs to break back below the daily, and it's in trouble. So
yeah, 180 is the level on Tesla, and I think their fundamentals are dramatically weakening, but the stock, people buy it.
Yeah.
They buy it because Elon Musk and robots and all the other garbage that will never happen.
So what's interesting is there's only 3 stocks, Amazon, Meta, and NVIDIA, that look good in the Magnificent Seven. All the other ones are a struggle right now, which again is not like the greatest sign in the world either.
We look at Carvana. This one is the bane of my existence. It's like running a marathon with a rock in my shoe.
Yeah. Shorts have been coming back in a little bit, but it's still low. 2 days to cover. Call activity has been excessive all the way up. I don't know. It looks like a double top potentially setting up.
Yeah. Every one of the other auto sellers have, like, AutoNation said that their used car sales were weaker and rates are higher and customers are still seeing repossessions. So I think if they pull out some sort of miracle here on their earnings report, the time is still limited on this one. I think it is a bankruptcy down the road. When? I don't know. I don't have a full position in this thing, partly due because it does these types of things.
Yeah.
Let's keep moving along to Amazon.
It's one of the Mag 7 that looks good.
Yeah. I think that if it breaks that island there, and it's trading a little below the VWAP from earnings, then it could start to fade back to reality. I covered some, I was wrong, and I might add back if we start to break that again. Going back to some other people here, can we look at SEDG? SEDG.
ugly.
Yeah,
Chart.
all these solar, but the shorts are there, right?
Yeah, there's definitely shorts there, like
Yeah,
53%, 4 days.
that's why they get squeezy.
It's trying to turn around. I mean, it's trying to bottom here. See
Can
what
we look
happens.
at, can we, I'm just moving along because I want to wrap
Yeah.
this up. MTCH, Match Group. I read that people are not going online to these dating sites anymore. They're actually, I was in the journal, they're actually doing it the old-fashioned way, meeting people at bars. I don't know. I didn't meet my wife that way. Met her through a friend. Not a lot of shorts involved there, right?
No, no.
Okay. Let's look at CRM, please.
Shorts are there on that one.
Yeah, then there's call buying, but there's been heavy call buying all the
No
way.
doubt, yeah. So it's
I mean,
not.
I think you could see a little bit of decrease in the shorts, but that's something I'm watching. One that I'm not involved in is Adobe. Could you look at Adobe? It's getting mashed down today.
Yeah, it's been rolling over here lately.
Yeah, this one is this is the thing that you have all these AI stocks, and this is typically talked about in the same realm, but it's just not producing the revenues, I
Someone
think.
clearly what's going on is someone big is selling shares. That's pretty obvious. You can see here's the volume. The middle
Yeah, if
one.
you could see it today, it's moving, it's down 4.5%.
And Tom, what's interesting is the computer draws divergences. So here was a divergence. And see how this one is like a light rusty color? It's not
Yeah.
like this red. So it
Mhm.
hasn't formed it yet. When you get these kind of lining up, that was a good signal back here when you got all three of them lining up.
Interesting.
And then you had two there at that peak. When you get two of them lining up, let's look back here. Here's two of them. So we look at this, we look at our volume on a tight, medium, and a loose basis. Yeah, Adobe it acts like crap lately.
Okay. Okay. I want to look at
And it should,
one.
and look at this. This is interesting. Seasonality, the stock can do no wrong until August. So the fact that it's underperforming seasonally is just not that great for the stock.
Interesting. I want to look at one that I got wrong. Didn't have a huge position in, but Meta. And this will reflect what was happening ahead of the gap up.
People have been short since October.
Yeah, but they're not that short. I
No,
mean,
no, it's just on a relative basis.
yeah,
They've been short. And they've had
you know,
calls a couple different times.
stock goes from 100 to 400, and it's a lot of people thought it was priced in, but they know how to turn the levers of commerce, and so they win, which is okay. This is that type of business that you can lose. Can we look at Newmont Mining? I'm starting to look at some of the gold miners as potential ideas, but there's nobody short, and people are buying calls. Eesh.
The one that looks a little better or did is Royal. Yeah, look at Royal Gold. That's a little better looking. Look at the short intensity on that thing.
Can we look
99%
at Yeah, can we look at can we look at GDX? I don't know. It doesn't have
tech rank.
your tech rank, but
No one's short it.
yeah. Ugh, okay, so that makes it difficult. Okay, can we look at another one that it's running a marathon with a rock in my shoe, Paramount, which is down again today. And I'm actually looking for a place to add more. Warren Buffett sold some, not a surprise at all. There's shorts there. Maybe they'll start shorting it a little bit more.
Yeah, I saw
Where's
there was a thing today about the Paramount and Peacock may merge.
Yeah, it's just their streaming service. It's nothing. If anything, this just puts more pressure on Shari Redstone to do something, and she has to do something into March. So there's gonna be something. She hands over the keys to someone else. I'll be happy. When we look at Pfizer, I always get Pfizer. Everybody always wants Pfizer, and I just
Dead. Dead. The
yeah.
one, if you're going to own a major pharma, Merck actually looks pretty good, and Lilly looks tremendous.
Yeah, but look at the shorts have just given up.
The one I like, which actually plays in the same space, which is coming back to life, and it's got some shorts in it, is Novo Nordisk, NVO. I just
Yeah, but
put
did
that.
what was is that gap down just a split? Is that
No, That was a earnings deal.
Okay. Oh, okay. I did not know that. I'm looking at a few more. We did some gold already. They all kind of trade very similar. Can we look at Occidental, please? Oh, no, sorry. No, we already did that, but they did report after Wednesday. Okay. Again, I think that we have a market that is a bit fragmented, to say the least. And I'm just trying to find a couple that are.
I think what's to me, the most interesting thing about this market is coming back to our sector stuff is let's just look at what the crappy sectors are. Media, food staples retailing, which is defensive, and traditionally that does well when you have a bad market. Energy, but that's up 3 spots in a month, so that's working its way positive. Telecom services, which gets hurt when rates go higher. Real estate, which hurts when rates go higher. Utilities, which gets hurt when rates go higher. So all the higher rate stuff is in the bottom of our work, and then the defensive stuff too, food, beverage, tobacco, and that food staples retailing is there as well. And then banks. I find what's really interesting about the banks, Tom, is in the last month, Bloomberg's now had 3 articles. First article was like, oh, we might have some banking issues. Second one was like, oh, maybe it's going to be about $1 trillion. The first one was like $500 billion. The second article was like, oh, $1 trillion. Then there's an article out this week, like multiple trillions of dollars. And now all of a sudden, every bank is making commercial property loans. So
Yeah.
I kind of laughed that.
Can we look at a couple banks? Can we look
Yeah,
at
sure.
Let's go to JP Morgan.
Yeah, I'm going to pull up our bank stuff too. Sort by market cap, so we just get the most liquid. JP Morgan looks good though. I own it in our alpha capture stuff right now, and it looks great. So it's the biggest of the big, so clearly
Yeah.
it looks really good. But if we look at the bank sector itself, which is really a lot, JP Morgan actually falls into the diversified financial sector. This is true bank. Royal Bank of Canada, people are short. TD, people are not short. BMO, people are short. So people are short Canadian stuff again. Bank of Nova Scotia, like people had been short. That kind of looks okay. PNC down.
How about KRE? I'm short KRE, and it hasn't broken enough.
I like it. The fact is, you can see the short intensity is only 2%, and it is just an ETF. But if we go to in here, we go to look at regional banks. Here's the regional bank group. And if we sort by short rank, you can see there's roughly 36 names on each page here. You can see we already come down to the 50% level. And you can see here, look at this. The full first page, we're only at 3%. Look how many names. No one is, Tom, it's huge. Look how many names. No one is short. It's just, I mean, that to me is probably one of the most interesting things. Look at this. It's multiple.
And it's completely the opposite of when it was a year ago when all these things were blowing up.
And so that's like, we sort by market cap. You can see US Bank Corp is the largest one by market cap. Because remember, like a lot of them go into diverse. But we only have, okay, so what's shorted here? The stuff in purple. Fifth Third, Regions, East West Bank Corp.
Yeah, it's because they're big liquid names.
Synovus, FNB.
Okay, cool. Okay, so I'm going to move along and try and wrap this up soon, but can we do Boeing? And if anybody has one last one, speak now. And they're bouncing the market. Man, I just think that they're just trying so hard right now.
Boeing, yeah, Boeing to me, it's actually a really easy short idea because we break $200 and you can see the tech rank got weak in here. So this move from 225 all the way down, the tech rank's been horrible. There's no excess puts or calls here. It's underperforming relative strength wise. Short intensity, yeah, 55%. It's okay. I like this as a short idea, Tom.
Okay, I have a couple more that we're gonna do. Can we look at COF? That's just another financial.
Yep. Again, no one's short it. It's type 2. So it's kind of, I'm okay with shorting type 2s that go to type 4s right now in the type of market that we're in right now.
Yeah, this one just needs to break. Biotechs, can we look at just XBI?
A lot of sloppy conject like up at this level.
Yeah, it looks like some shorts are coming back in.
Yeah, it's still 5 days to cover, so it's
And
still.
can we look at a few home builders? Can we look at Lennar? I'm short the home builders, and I'm actually a little surprised that they've had the strength they've had.
Yeah, Lennar is a type 2. It's doing well technically, but no one's short it. I'm
Yeah.
short this one. DHI, we're short it this week in our weekly screen. You can see tech rank on this one's only at 30. Short intensity is at 3%.
Can we look at XHB?
Yeah, no one's short that.
Okay. Can we look at, and I'm going to just cut it off here. Can we look at MSOS? This is the cannabis ETF. Yeah.
Yeah, people are short it.
People are short. Yeah. I don't know. I don't really have any opinion on these. I had a trade in that a while ago, so I'm just gonna.
So hey, see, back to your housing idea. Here's one that I like that's ancillary to housing is this. No one short this thing. And this thing breaks like
Restoration hardware.
Yeah, yeah.
Yeah.
I think this one to me is a really interesting idea. And what I like about it is, so this is what we call our DMA channel. The whole idea is when you move below here, the bias turns negative. Here's the monthly. This is a monthly chart. Obviously, I can
Yeah, but it's all the COVID stuff. Okay, you know what, Jeff? I am gonna leave it there, but I want to before we leave, what is your favorite long and short idea right now?
favorite. Let's see what my favorite short. Oh, I know what my favorite short is.
And we're gonna end every one of these with your favorite long and short. And kids, don't put all your money into each of these, please.
This is my favorite short. Generac, which is basically power for when you lose your power. It's a generator.
Yeah.
And if the consumer is pulling back and struggling, this thing could bye-bye to the down. We're short it right now.
Okay. And your
favorite long, what's so interesting is the one bit of sector rotation that we've had this year. I'll show you. Has been pharma. Pharma ranks number 2 in our work. It's got the best tech rank. And if we just look at this here, you can see how basically this black line is the delta percentage. It's like an index on all the pharma stuff, equal weighted. And then the blue is the relative strength against the S&P. And you can see shorts they're gone from it right now, but it's definitely improved. So I like the pharma space. But then again, I want to try and play something in pharma that hasn't really had move, so to speak. So here we go. Bristol Myers is really interesting. It's not our typical short squeeze thing, but this thing is just basing down at this level. And we have a technique that we use called the bottom fisher. And right now, this is on the, if we look at the seasonality, we can see we got some decent seasonality going into April. So I'm going to go with Bristol Myers, and it's going to hold $50 and maybe start to improve. And if we look at the volume, volume is almost.
I think they're buying a couple companies too. So I don't know. I'm on the other side of that one. I don't know if they can.
I'm going with atypical.
I have one last one, which is a small cap idea that I'm long. I actually have been adding a little into the fund, these levels. Recore Systems, RECR, or REKR. Sorry, I should know that one. Looks like some shorts are there.
Oh yeah, definitely.
And the gist of this one is that, I mean, they just did a secondary offering, cleaned up their balance sheet. They had a going concern rating from their auditors. That's done. That's off now. And for them to get customers, they can't have a balance sheet looking like garbage, and especially with a going concern statement on there. So I think that if anything, this one has the squeeze potential. How many days?
14 days.
Okay, that would be a nice 2-week run for me. Anyway, Geoff, that's it, everyone. Thank you so much for everything. Watching the market try to squeeze higher. We'll see how far they go today. It's option expiration.
Yeah, let me look at one thing real quick. Let's just see how
Okay.
I have a list that like is of the threes. So I just want to see, get an idea of how much of it is being squeezed right now. It's not, I'd say maybe 60% of it is up and 40% of it's down. So it's not like it's a crazy number.
Okay. All right. We're done. Geoff, thank you as always. Have a great weekend, everyone. I will
Yeah.
be at the desk around all weekend and talk to you soon.
Talk to you Tuesday.
Yeah.